Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone, and welcome to Accredited Investor Markets Radio. I am your host, Christopher Cahill. This is episode 10. Later on, I will interview Charles Smith, farm boy and investment banker, about agricultural and aquacultural investments. But first, I'd like to direct your attention to an article on AccreditedInvestorMarkets.com, AIMkts.com. dated October 2, 2014, by our regular contributor named Billy Ray Valentine. And the article is a defense of the 1% called In Defense of the 1%. In short, the article argues, the 1%ers worked, the 1%ers saved, while others played. Well, maybe it is or isn't that simple, although I would venture to add that many 1%ers have created as well as worked and saved, and I can illustrate that through a biased sample of recent news stories. In Forbes magazine on September 29th, Abram Brown wrote an article called Meet the Newest Members of the 2014 Forbes 400. And that is the 400 richest Americans. The first thing I would note is 27 new names appear on the list, which means 27 old names drop off the list. In 2013, the turnover was 20. Coming onto the list, 20 leaving the list. That's a 5% turnover. Maybe it should be higher, maybe it should be lower, but there is turnover at the very top of American wealth. The one newbie I'd like to point out, who is discussed in the article, is Elizabeth Holmes. She is 30 years old, a Stanford dropout, dropped out in her sophomore year as a chemical engineering major. Why? Because she thought she could make better and cheaper blood tests. Well, evidently she can, because the company she started, Theranos, Theranos, she has partnered with Walgreens in developing the company and attracted venture capital fundraising, now owns half the company, which has been recently appraised at $9 billion in worth, which means she has $4.5 billion. Well, that's great for her. What about the world? Well, the world has, as a result of her work and the work of her co-investors, many blood tests which are accomplished through a tiny finger prick rather than an entire injection of a needle. As you might imagine, that's a lot cheaper and easier to administer, particular importance to the less wealthy areas of the world. Ms. Holmes has committed Theranos to affordable, real-time health information. Well, that's one way to the top of the mountain. Another way was illustrated in an obituary I read in the Chicago Sun-Times. This was last week, too, on September 27th, of a real estate mogul named Sue Jin. Well, a mogul? That sounds almost like somebody who was born to wealth. Certainly not the case with Sue Jin. She was born the child of Chinese immigrants who eventually saved and got their own restaurant. She learned a thing or two about food, which is important in her own wealth creation. But key was that when she was a young waitress and Playboy bunny, she saved her tips and started buying real estate at a time when real estate was starting to really climb in value in the Chicago area. But she didn't stop there. And let me just read to you from the obituary. Served a half-frozen sweet roll on Midway Airlines, she contacted the company chairman and successfully pitched to be its caterer. She founded Flying Food Group. It transformed airline meals by focusing on cold but tasty fresh ingredients in attractive lacquered boxes rather than inferior facsimiles of hot restaurant meals produced in cramped jet galleys. Today, the company supplies 300,000 meals to more than 70 airlines and many of the nation's Starbucks coffee shops. Flying Food Group generated $436 million in sales last year. Well, there you are. Older travelers certainly will remember the transition from crummy warm food to much superior cold food. And that came out of the mind of one person who saw a need and filled it. She not only worked and saved, she was able to identify a market opportunity and to pursue it. Last on our hit list today, I'd like to direct your attention to a very short article in the September 6th Economist magazine, which provides a look into how, even as banks continue to leave the commodities business, commodity trading houses are getting ever more deeply involved in the other parts of the commodity business, not the trading parts, but rather the extraction, shipping, and refining of raw materials. The article does a good job of painting a picture of the industry in transition. You've certainly heard of huge U.S. commodity firms like Archer Daniels Midland, Cargill, and Cook Industries. But most commodity firms began life as simple middlemen of commodities, but some now own the infrastructure that produces and distributes commodities as well. The Economist piece demonstrates how some of these firms now explore for oil and own the gas stations that sell the resulting gasoline. Others mine and market coal. Others own farms, processing plants, storage facilities, and distribution facilities. So there's working, saving, and in this case, learning the business, pooling efforts and expertise, and investing with others. Well, that's enough of me solo. Let's move on to the interview. Well, today we have with us Mr. Charles Smith. And Charles Smith is the founder and managing partner of Pegasus Intellectual Capital Solutions, LLC, a boutique investment banking firm that specializes in creative solutions for its clients related to capital raising, mergers and acquisitions, restructuring, reorganization and workouts, exit planning, shareholder value maximization. Charles has been at this for 34 years in the investment and commercial banking worlds. Charles has crafted solutions to many intractable problems and created strategic marketing, financial, and capital raising solutions. Glad to have you with us, Charles.
Thank you, Chris.
Now, Charles, you have an unusual background for a person whose current portfolio is, as I have just described. You're a farm boy, aren't you?
That's right. Born in Iowa City and raised on a farm just about 30 miles east of there.
What kind of farm was it?
When I was a little boy, it was a classic old McDonald's farm, and by the time I was in high school and then into college, we had become specialized like agriculture has continued to become specialized. But when I was little, we still had geese, dairy cattle, beef cattle, and hogs. When I graduated from high school, we were one of the largest hog producers in the county, and we're producing about 1,000 head a year at the time, which is small by today's standards.
So you had a sister named Fern, and she became disgusted with all of this pig raising and left town forever. Is that right?
Exactly.
Okay, well, this is relevant, audience, to what we're going to discuss today, which is investment in agricultural investment opportunities for accredited investors. So, Charles, what sorts of investment opportunities do accredited investors now have more access to after the Jobs Act? What kinds of things might they put their money in?
You know, Chris, the world has changed so dramatically since I left my undergraduate alma mater, Iowa State, with my degree in agriculture. It's hardly recognizable in many respects. The equipment is huge, it's automated, it runs by autopilot, it's headed toward fully autonomous vehicles, and we are dangerously close to reaching a period where fully autonomous farm tractors will dominate the landscape in the United States. It'll start in the western United States and Canada, where the fields are the largest. And that is going to bifurcate farmland ownership from farmland operations. That's one of the big changes that we will see yet, I think, still in my lifetime, and I'm 57. The other major change is the technology and the science, where you see genetically engineered seeds that are resistant to herbicides. And we can talk about it later, but you see companies like Monsanto, which has always been herbicides, now producing seeds. They have bought seed companies. so that they would have the genetic library. Pioneer seed corn is now owned by DuPont for the same reason, and Bayer. All produce seeds, herbicides, and pesticides. So the science has really taken over, and I see Intel, Brian David Johnson, who is their futurist, talk about using sensors in soil. By 2020, sensors will become virtually invisible, is a quote by Brian David Johnson. And that virtually invisible is synonymous with virtually free. So we will be seeing sensors in farmland soil to detect all sorts of things, from fertility to pests to moisture. And in fact, even today, your John Deere combine, when it harvests in the fall, will catalog the harvest per square foot. And then your John Deere planter next spring will modify the seeds that it puts in per square foot so that it doesn't overburden the soil compared to its ability to produce its fertility and moisture content, or underproduce. So you have this micro optimization of every square foot of land while you drive in your autopilot controlled John Deere tractor that all you have to do now is turn at the end, and then you can go back to watching TV or reading a book. And we are dangerously close to fully autonomous vehicles, and one of the companies in Iowa, Kimsey Manufacturing, is leading that area. John Deere is playing their cards very close to their vest. But if you look at what Caterpillar has done in fully autonomous mining equipment and what Oshkosh Industries has done for trucks, both in military, for largely defense, you can see where we're going to be shortly.
So it's sort of like what we used to think of as mining operations in terms of scale and technological intensity, but without the excitement and risk of finding something. Instead, you are investing in the soil in a regularized, mechanized, and technologized way at a very, very large scale.
That's right. And what's happening, Chris, is causing all of this investment in the area is China. It's China and India both, but mostly China right now. China's got this rapidly expanding middle class, and 6 billion years of evolution have dictated that when humans can have animal protein, they will prefer that over plant carbohydrates. So China right now is the world's largest hog producer, with 40% of all the hogs in the world located in China.
They are the hog butchers of the world. We might still be the stackers of wheat, but they are the hog butchers to the world.
And Chris, that creates opportunities for all those empty cargo ships going back to China.
Mm-hmm.
We come here with our flat screen TVs, and they're going back now with hay and feed. China, for all of its strengths, only has 60% of the arable land that the United States does. So their shortage is always going to be in being able to feed their people.
Mm-hmm.
So they're making strategic investments in the United States. China's largest hog producer, Shuanghui, bought Smithfield Foods, which is our largest hog producer, for $4.7 billion earlier this year. And KKR has made 2 investments, one in June and one just yesterday. But they acquired $150 million investment in China's state-owned food giant COFCO, and then they invested $400 million yesterday in a Chinese chicken producer. So really what the macro is the growing world population and the growing world middle class.
Well, okay, but let's get back to the farm a little bit in a more tractable sense and more traditional sense. And let's focus for the moment on land acquisition, land rental, and land use, and how might a accredited investor in Chicago or LA get involved in investment activity in that regard?
The classic way is that you go out and you shop for farmland by calling realtors. It's a very inefficient way. Most farmland still is traded in a private market and never sees the light of a public sale. The way that's most easy to invest in farmland is through a farmland fund, and you can invest in any corner of the world at this point in time through one of the funds. The funds will generally pool, although there are funds that also will, for larger investors, acquire a particular type of farmland. whether that is an annual crop like almonds or oranges, a perennial crop, or an annual crop like all of our feed grains. And then they will manage it to their specifications, including even taking the output and having it shipped to a location of their designation.
Okay, so if somebody really believed that biofuels were on the way up, which they certainly seemed to be a few years ago, one might be able then to invest in farmland that produces biofuels. Similarly, though, I suppose somebody who thinks biofuels may be on the way down could short such investments.
You know, and I'm not sure how you would short it, but you can certainly go long.
Yeah.
That's the specificity. But there are funds right now in the U.S., Canada, South and Central America, Africa, Europe, and Australia that I'm aware of. And so you can really drill down into what you're really looking for. In the United States, you can get very specific down to the individual farm.
Well, I guess from my own background studying politics long ago and being aware, certainly in the U.S. and the EU, most dedicated news readers are aware that farm produce the markets are subject to governmental interference, whether to support prices, to provide disaster insurance, and so on. So it would appear to somebody who's on the outside that one has to track the political developments in making such investments. Do you think that's true?
There is truth to that. Even in common production agriculture like corn and soybeans, political decisions can have positive or terribly adverse effects. I'm old enough to remember when the Soviet Union invaded Afghanistan. And at the time, soybeans were very high in terms of price because Russia was buying so many, Soviet Union. And Jimmy Carter, in his wisdom, banned any exports of grain to Russia or to the Soviet Union. And our grain prices just plummeted. And it happened to be at a time when Brazil was really coming online, and all we ended up doing was making Brazil the second largest soybean producer in the world, because all the production went there. So, yes, one bad decision by a political leader can really collapse that sector, but for the most part, it has been a very consistent producer over the years, and farmland is one of the most consistent asset classes, and may I argue, the only asset class that a high net worth family could pass on to their heirs with certainty that it will be there 2 or 3 generations from now.
Why do you say that?
If I gift stock, if I gift anything but a tangible asset like one of the metals, silver or gold, which aren't income producing, any of the other assets, a technology company, any company, could be subject to insolvency, technological disruption, and be out of business. It's hard for me to think of any asset that's more permanent than farmland.
So a possible inflation hedge as well as something that will maintain its value, or at least some value,
Absolutely.
For one's heirs.
In fact, I've even been approached by Middle Eastern investors who are interested in not only acquiring U.S. farmland because it's productive and politically stable, but they're looking to take the output and then use that to gain political favor with countries with whom they wish to gain favor.
Oh, such as in Africa or in other developing areas? Yeah.
Exactly.
And it certainly might be, one might draw a connection between your earlier comments about China and such an endeavor as well.
Exactly. That's the kind of flexibility we have these days, and technology has made it available, because if you own farmland, you can rent it for cash, which is the classic way. You could share crop, which is one of the old-fashioned ways. Or you could have it custom farmed for you. So you could really be in the production business. And you're really having a contract manufacturer produce it for you. Mm-hmm. And technology allows you to make sure that all of that grain that's actually grown is actually harvested and sold in your name, because your John Deere combine is recording every bushel of grain that's being produced.
So it's very difficult to send stuff out the back door. So to speak.
Much tougher. Yeah.
But let's talk a little bit about robotic farming, which has a more romantic sound than driverless combines. But is that the same thing?
It's interesting what's going on in robots. The Farm Progress Show is this week in Boone, Iowa.
Boone, Iowa. Okay, now wait. Before you go any further, where is Boone, Iowa?
Boone, Iowa, I think is well named because it's so far out there. It's really in the boonies. It's northwest Iowa.
Northwest Iowa. So there's nothing but miles and miles of miles and miles?
Of 6-foot deep black soil.
Oh. And so there's this show. Is it there every year?
They move around. They alternate now between Iowa and Illinois. Illinois has a permanent site, but in Iowa, they still choose a farm where the show is held.
One last prosaic question. Are there people from around the world, Chinese or otherwise, investors, flying in greater numbers on private jets?
Yes, I would say that's the case, although that's anecdotal.
Yes.
One of the most popular subjects are the use of drones in production agriculture. We're going to see drones that do all sorts of tests, look for insect concentrations or disease concentrations. We're going to see use lasers to eliminate weeds on a micro basis, so one little shot of a laser to get rid of a weed or one little shot of a herbicide. It's going to be a much more sustainable agriculture than in the past and very high tech. That goes along with our sensors, our GPS, our satellite images of the earth that can tell everything about the soil moisture and temperature and the yield ahead of harvest time. And then you combine that with autonomous vehicles, and the farm operator of the future won't be farming 40 acres with a mule, as my grandfather did, or hundreds of acres, as my father did, or thousands of acres like my brother, but tens of thousands of acres.
So the market for mules is going to collapse.
It's really going to be tough. Yeah. That and all your buggy whips.
All right. Okay. So, but that sounds like a standard public company investment, or maybe you can get in on the ground floor with some startups, or involve yourself with some angel people who are really moving into the high tech aspects of what you were just describing.
Yes, and I will share with you, but I won't name names. Very smart money, and this would be international money, is investing in the agribusiness sector. And that is everything from technology, software, electronics, to aquaculture. And aquaculture is one of the hot areas in agribusiness. It's virtually invisible to the rest of the world. And the hot subsegment in aquaculture is aquaculture feed, which by my observation is being rolled up by private equity.
All right, hang on. What is aquaculture? Is that like rice?
Our aquaculture is fish farming.
Oh, okay.
But it's not fish farming that we would think of with catfish ponds. These are open ocean pens filled with salmon and tilapia. So the technology has evolved to the place now. Salmon are particularly tough because they need to be in fresh water when they're fried, and salt water when they're mature.
Yes.
And so you see most of the salmon production in Norway, Scotland, Chile, and then some in Canada, because they've got the saltwater and freshwater combination. But we're using open ocean pens. So think of a upside down salad spinner bowl or a sieve that holds all the salmon in it. So the fresh water from the ocean comes in and moves out and takes away its waste. So the globe has already been mapped for shoreline about how much farm-raised fish we can use. The reason that private equity has started to focus on the aquaculture feed sector is because of sustainability. That is the real cry for our times. The ocean has got all the pressure on it that it can take, and still today, most of the feed that goes to farm-raised fish is fish meal. So the next wave is vegetable matter, whether it's soybeans or something like Lemna minor, which is the smallest flowering plant in the world that can be grown in animal waste that comes from our large confinement units with 100,000 hogs.
So we're coming full circle.
Yes.
Go ahead.
You know, when I was a boy, we had free range hogs. Now everything is in a confinement unit with 100,000 or 150,000 animals, and they produce a tremendous amount of waste that is very high in phosphorus, which will actually sterilize the soil with time if it's put on in too higher concentrations. It's a terrible problem in parts of the United States and Canada and globally. And that can be used with a fairly high technology solution using digesters and high temperature incineration so that you can create a circular process so that the output only produces two things. It produces organic lemna minor, which is duckweed, and potable water. And you use the duckweed to feed back to your tilapia and your salmon. So there is a lot of technology, a lot of science in where we're headed. And if you look out into the future of global world population and how we're going to feed it, the only answer is aquaculture. We will always have beef and hogs, but aquaculture is where we're headed.
All right. Well, you've certainly mapped out some fantastic, and I don't mean that in the sense of unbelievable, but rather fantastical sounding. And then one thinks about where we've arrived at and how far we've come just in our respective lifetimes, and one doesn't believe it's fantastical at all. So you've been giving us some scenarios. But what has worked out in recent years? I mean, we went through this financial crisis that had its effect on land prices of one kind or another. But what kinds of investments in our century have really panned out agriculturally?
It's unbelievable what farmland has done in the United States. I regret that I did not invest more heavily in farmland, but it has done far better than any other asset class that I can think of. And it's done so consistently. It's only had one downturn other than the Great Depression, and that was in the 1980s, which was looks to have been a wonderful time to buy. So aside from farmland, other than that, John Deere, the technology side, the equipment manufacturing side, has done wonderfully. And as have your chemical and seed companies have all done well. But it is because of the macros that are in place.
Well, all right. Well, Mr. Smith, we have spent some time here, and I think it's been very valuable time, certainly for me, and I'm confident that it's been valuable for our audience. And I want to thank you for joining us today.
Chris, it was my pleasure.
That was Charles Smith, founder and managing partner of Pegasus Intellectual Capital Solutions, LLC, a boutique investment banking firm. But obviously they have at least one man who knows his agriculture and knows his agricultural technology. Thank you for joining us today on Accredited Investor Markets Radio. We were glad to have you. Let's do this again sometime very soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.